Perfect. Hi, everyone. My name is Nato Callahan, CFO of Timberview Capital, joined by my fantastic co-host, Stephen Ryan Watts. And tonight we are here for an update webinar on the status of our Trulo Homes Cottonwood Creek build-to-rent development community project. Very happy to have everyone back this evening for another update. If you are already familiar with this opportunity or you are wanting to learn more about the documentation, disclosures, and relevant materials for this investment offering, please go ahead and scan this QR code, which will instantly take you to our current portal, which will allow you to read through the specifics of the investment opportunity and other updates that we've been provided over the last several months. If you are new to Timberview Capital, we typically do an intro video that we've gone ahead and compiled into a small video highlighting our background, our thesis, our philanthropy, and what we stand for as a Timberview Capital organization, all under our Smarter Approach to Investing title. There's our founder, Dr. Tyson Cobb. If you want to learn more about that background, you can scan that QR code and watch that to learn more about our background and what got us here today. Tonight, we'll be speaking primarily about our Trulo Homes Cottonwood Creek build-to-rent community development opportunity as an update webinar, as we've been working on this deal for a couple months, and the team continues to make progress as things go along. And of course, as we talk about this opportunity this evening, full disclaimer, we are not CPAs, financial advisors, or attorneys, and this presentation is provided for educational informational purposes only, with all returns not being guaranteed, but projected and risk being inherent to any type of private investment opportunity. For myself, I'm the CFO of Timberview Capital. I got my start working for the Department of Defense as a geospatial analyst before getting into real estate at the same time and also starting a real estate software company. Grew to a couple hundred doors in the multifamily space before being asked to be the director of acquisitions for a multifamily firm before coming on last year as a CFO, where I lead acquisitions, deal sourcing, and investment structuring. Our founder, Dr. Tyson Cobb, is a semi-retired orthopedic surgeon since about 2019, and main goal in life, work less, make more, pay less in taxes, and step into his role as a grandfather for the first time this year. So he's really enjoying that. And his main goal to help everyone in our organization is to help you replace your active income with passive income, get your time back, and live your life ultimately by your own design. None of this is possible without our Director of Investor Relations, Tracy Rommel, who, after 17 years of private banking experience, brings her investor relations experience to Timberview Capital, where she works with our investors to facilitate documentation, investments, paperwork, accounts, and serves as a key resource for facilitating all the questions and answers and actual nitty-gritty details that help people participate in the litany of opportunities that we have. What we do as an organization at Timberview Capital is primarily operate as either a fund-to-fund manager or co-GP, where we research and vet new deal opportunities and use the heft of our investor database and network to negotiate superior returns for our investors within the group. We then source highly skilled tax and retirement account consultants that help our investors keep more of what they're already making and earn and keep more with the different strategies they're able to implement, and host series of educational webinars like this, in addition to our How to Catch a Bad Deal series, where we walk through different asset classes and how they can be misconstrued and how you can ask the right questions to make sure you're getting at the right opportunities at the right times. Ultimately, our goal for everyone who is a part of the Timberview Capital Network is to invest with confidence. We want to be your trusted partner on your journey to financial success, whether you're a physician or other high-income professional, so that you may build generational wealth through real estate and other alternative investments that we provide through the Timberview Capital Network. Ultimately, what you are here to learn is how you can take what you have and turn it into what you can build and do it in a way that's aligned with your risk tolerance, your timeline, and your financial goals. With that, about last year, we started our Cobb Club, which is one of our small group masterminds that we launched back in Q4 2026, or 2025, excuse me. And what the Cobb Club is our private white glove membership for accredited investors to access improved investment economics, get advanced tax optimization education, and personalized support. And what that looks like in the Cobb Club for the members who enjoy these benefits, they enjoy benefits such as early access to our new deals and underwriting frameworks before public release. In addition, they get access to our annual retreats, which include 3-day private events both at Tyson's Farm in Southern Illinois, and also international destinations like Cancun all-inclusive resorts, where we come together for community networking and workshops. We primarily focus on tax optimization education with strategies such as cost segregation studies, qualifying for real estate professional status, short-term rental tax loopholes, SDIRA planning, discount Roth rollovers. and helping facilitate as many mechanisms as we can to help our comp club members save as much as possible on taxes, usually to the tune of tens of thousands, if not hundreds of thousands of dollars per year. We facilitate those savings through a series of wealth strategy calls where we bring on our professional network of CPAs, attorneys, costing providers, and advisors who offer discounted services to our comp club members. And on a deal-by-deal basis, provide improved economics as well, giving our investors either better promote structures, higher cash flow, lower minimums, or other types of economic benefits simply for being a part of the club. Finally, our comp club members enjoy priority consideration in new deals and lifestyle benefits such as the member property exchange. What that looks like so far in August of 2026 is just that one benefit of improved investment economics has provided our investors an average or overall compilation of $210,000 in additional economic benefit. What that means is that of the 13 deals we've launched this year that have a comp club member share, that total aggregate benefit to our comp club members is over $200,000 this year. We're very happy and very proud of that to be able to bring extra benefits to those in the club because it literally pays to be in this room. Now, talking a little bit about what that looks like tonight, for example, for those who are investing directly in this opportunity who are outside the TimberView Capital Network, those returns are on the left-hand column here with a 1.88 projected equity multiple, 22% IRR, and a 50-50 split. Our TimberView Capital Network audience members this evening, which applies to every single person here, enjoy on this very same deal as we're talking about this evening, a 55-45 split, a 23.2% IRR, and an 8.9% projected cash on cash. And our comp club members get a little bit of a bump on top of that with a 60-40 split, a 24% IRR, and a 2x equity multiple. So a little bit showcasing the difference between working directly with sponsors, being a part of the capital network, and a specific improved investment economic projection for this opportunity. On the other side of the comp club sits our TimberView Academy, which is designed to help investors get educated on what it means to be an investor, what it means to be private investment, and what it means to participate in different asset classes, get exposed to depreciation, and other complex topics as you start your journey into the private investment space. And the TimberView Academy is a complete investment education curriculum designed to take you from 0 to 1, with 1 year of access to in-depth modules on school covering tax mitigation, wealth preservation, private investments, and becoming a confident investor. In addition, all members of the TimberView Academy get access to an onboarding call with Dr. Cobb, monthly live group calls with Dr. Cobb and myself, TimberView deal evaluation framework to learn how to analyze opportunities for yourself and opportunities we bring to our network, and access to our growing library of tools, templates, resources, and professionals. This is all about learning how to talk the talk and walk the walk in this space. Is a great starting point for investors to go from I don't know anything to I'm ready to make my first investment. As a bonus, all comp club members get complimentary free access to the entire TimberView Academy. And our commitment with this TimberView Academy is purely educational, with our confidence guarantee that if you don't feel comfortable investing in your first deal after completing the program, we'll continue to work with you one-on-one until you are, and that all profits of TimberView Academy are going 100% to charity. This is all about supporting our philanthropic mission to give away $1 million a year to charity and help you, the investor base, learn what it means to be a prudent investor so that you make the right decisions for you and your family on an ongoing basis. If you think you might be interested in learning more about the TimberView Academy, you can scan this QR code here, and I'll go ahead and book a time to be able to speak with our team about it. You can also visit timberviewacademy.com to learn more about that program as well. If you'd like to speak with me personally about the Comp Club, TimberView Academy, or any of the current investment opportunities that we currently have offered, including this one you're going to see tonight, you can scan this QR code. You'll come right into my calendar. We'll get a chance to speak directly about what questions you may have, see how we can go ahead and facilitate your next step. So without further ado, we're going to start hopping into our Red River opportunity this evening. As a quick reminder, here are the projected investor returns for this deal for both the TimberView Capital Network and our Cobb Club investors, ranging between a 1.8 and 2.0 equity multiple, low 20s IRR, 7 to 9% cash on cash, and between a 50-50 and 60-40 split. How we vet deals is all about the team, property, and location. So as a reminder of why you're hearing about this opportunity tonight, I'm going to first start with the team. First off, the Red River Development team has over 25 years of combined experience in ground-up development and over 2,300 residential units developed. That coalesces in over $700 million in total AUM, 44 completed development projects and over $200 million in raised investor capital to date. This is a group that's been able to come together and do this multiple times, which in the development space exceptionally matters. In addition to development, specifically in the build to rent space, there's not one, not two, not three, but six projects ongoing. This is the seventh as we continue to move forward. But these projects are across the nation from Oklahoma to Missouri to Indiana to Arkansas. And are, if you can see here through this section in the middle, not only been completed, but have stabilized occupancies in the mid 90%. What this showcases is not only the team's ability to develop projects in multiple states on multiple timelines, but also stabilize and lease these projects and start distributions over and over and over again. The Trulo Homes Jenks property is the most recent one that got sold. It was sold back in January 2026, first exit, and it sold at 98% occupancy with, and I have to reiterate this, rents 20% above the pro forma. It was refinanced into fixed rate debt. It was able to provide 9 to 10% cash on cash for the actual project deliverables on the returns. Overall was a 5-year projection from 2021 to 2026. And overall was able to deliver their investors just about a 1.7x equity multiple on their capital, with a construction completed around November 2022, sold January 2026. So what was that? Just about 36 months between construction completion and sale. So really glad to see not only can the properties be stabilized, but in real time, projects are being sold and delivering returns to investors on the projected basis. And I don't think I can stress that fact enough over the last several years that we've seen some deals with very lofty aspirations that never quite materialized. Red River team's been able to do that in real time. In addition to the build-to-rent development community, this stands as the SREO, or Schedule of Real Estate Owned and Operated, in terms of the development projects the team's been able to build. Everything from senior living to medical to build-to-rent to movie theaters to industrial to specialty retail. Quite the breadth of experience, totaling over, I believe, $1.2 billion in development projects completed to date. On the property basis, the Red River team also has a pretty specific opportunity for why this is a great deal to participate in. Primarily in the build-to-rent space, the primary product is differentiated, high-quality, purpose-built product for rent, where on average, people choose it because rents are 30% lower than the average monthly mortgage. It has a strong demand for low-density housing and a lower turnover cost given a stickier tenant base who prefer the home-style living as opposed to apartment complex living. That's why national occupancy rates are higher for build-to-rent single-family than conventional multifamily, and it tends to target higher income demographics than conventional apartment communities. This ultimately results in a renter by choice preference, where the amenities style living, the single-family home at a lower cost basis, allows for build-to-rent housing to attract a higher quality demographic of higher income renters who like the fact that there is less liability responsibility in the rentership with lower costs, and they're able to take advantage of the flexibility that the rentership provides. For the particular location of why this deal makes sense, we have the Waco, Texas market, which has coalesced into a 14% population growth in just 3 miles around this property subject area within the last 2020-2022 area, with median household incomes of $84,000, about 30% over national averages. With this area, Waco continues to be strong for build to rent, primarily not only due to the household growth, but income growth, rent to income ratio, and overall density that is outpacing the national averages. So with limited new construction, low inventory, affordable costs of living, and the ability for the high household incomes to support the rent that we need to be able to get, everything brings together for Waco, Texas being a strong capacity for this deal, the same way that they were in Ohio, in Indiana, in Arkansas, and other parts of Texas that the team's been able to operate within. This opportunity in the Sopal submarket is located as follows. This Red River logo right here showcases where the build-to-rent community is being developed. So you'll note that just to the south is a movie theater, fast food chains, coffee chains, Denny's. I mean, can you really have a development project without a Denny's? You guys can answer that question, but I think so. In a variety of close proximity to other things like entertainment areas such as Topgolf, Chick-fil-A's, and other entertainment spots. Not to mention the variety of shopping centers just down the road of the Central Texas Marketplace. So not only is it well positioned within the Waco, Texas market, but within the specific neighborhood subzone, it's well proximate location to entertainment, food, and other shopping centers. With me this evening is our great co-host Ryan and Steven, with Ryan being the managing partner and co-founder of Red River, who previously completed over 13,000 individual oil and gas and real property acquisitions across the past decade, focusing on investment sourcing, capital formation, with over 5 different private equity partnerships having been raised for, and oversaw the successful sale of the majority of assets in 2020 of the Kimbell Royalty Partners. Being a graduate at the University of Oklahoma, he is joined by his brother Stephen Watts, the other managing partner and co-founder, who has developed, owns, and manages 3 historic redevelopment projects in Tulsa, totaling 180 multifamily units and over 40 million in value, with over 520 multifamily units under development in Tulsa and Oklahoma City, the pipeline totaling over 100 million. Also a graduate at the University of Oklahoma and Oklahoma State. We're very happy to have them on. The men, the myth, the legend, Ryan and Stephen. Guys, thank you so much for being here tonight.
Hey, thanks, Donato. Good to be here with you. Good to see everybody here tonight too.
Yeah, thrilled to be here. Great to be on tonight.
Perfect. Well, we appreciate you guys coming back on. We know you've done a couple of updates so far, and so now we're looking for the August 2026 update. And for our audience this evening, I think it's important to be able to showcase that when development projects are presented or pitched, a lot of things can go well, and a lot of things can go wrong. And with Ryan and Steven coming on, they've been providing monthly, if not every 6-week update webinars to you, the audience, to showcase not only what the business plan is, but how it's being performed on in real time, which I think is critical. So tonight is the latest update in that series to showcase the progress that's been made over the last several weeks and last month as we go into August and now finishing up going into September 2026. So this evening, we'll talk a little bit about the project snapshot, status update on construction progress, the capitalization and budget, in addition to the cost and building status, are people being paid on time. We'll go ahead and then transition into our schedule and coordination of being on schedule, talk about the leasing and marketing for when we're going to be continuing and starting the leasing and marketing for finished product, and then progress photos with our next steps. So without further ado, I'll go ahead and turn this over to you guys for a project snapshot and where we're at right now and the current status.
Yeah, thanks, Donato. Yeah, we're very excited about this build-to-rent project in Waco, Texas. This is our 7th build-to-rent community. We broke ground on this community in late February. About a 23-month total construction period, starting in late February. $55 million total capitalization project, and have a guaranteed max price contract with our general contractor, LMF Construction. So we're well into construction here. This thing's been very de-risked from both a capital standpoint and a construction standpoint, and we're excited to deliver this project into the Waco market that we think is really strong.
Fantastic. So with respect to the construction progress, can you walk us through a little bit about what's actually been done, and are we on track with this opportunity in terms of what the current business plan was and where we're at today?
Yeah, thanks, Donato. As potential investors in this project, you guys are getting the benefit of this project already being, 5 months into construction. So we've made a lot of progress on this site. We've done all the dirt work. We've gotten utilities roughed in. Building pads are formed, and we'll start pouring concrete pads here pretty soon. Primary power is underway, and there's a lot of the other utilities are also in place on site. And so we're really about to start putting roads in. We've already poured some of the approaches in terms of the roads. And so homes are about to start getting framed here before too long. And it's just important to emphasize the amount of risk that's been taken off the table here with this project already being underway. And a lot of times you invest in a development project and they haven't even closed on the land yet, but this one is already underway. And so you also benefit from a condensed timeline to get to a sale. So I think we're projecting a 43-month sale. We're already 5 months in. So you basically are looking at from the time you invest to when we sell to be condensed by 5 months.
Now, in terms of overall cost, as a main component of development and other projects are cost overruns. Can you talk a little bit about the current capitalization, what it looks like for budget, and what money is being spent where?
Yeah, absolutely. So total capitalization for the project's 55.7 million. 35% LP equity, 65% debt. We have our lender here on the project is Enterprise Bank, large regional bank. That's priced at SOFR plus 300. So, kind of mid to high sixes. Very, very conservative capital structure, right? Which is important for investors to understand. We don't want to be under pressure with high leverage debt or preferred equity that pushes us into a sale at the wrong time. So this allows us to really have flexibility. Our plan is to build this lease up and sell it in 43 months. But we're not going to be under pressure to do that if we don't think the time's right. We'll just make distributions and clip the coupon here. So you can see, overall kind of a breakdown of the different uses of funds. But yeah, we're on time, on budget, as Stephen mentioned, and feel very good about the cap structure here for this deal.
Fantastic. Now, when it comes to the construction cost and billing status, can you walk us through a little bit about what this slide pertains to in terms of what's been paid for, contract buyout, and what this means to our audience this evening?
Yeah, so we have a GMP contract. The contract that we've signed with our GC is a guaranteed maximum price, and that's $34 million dollars approximately. The contractor's bought out 88% of the contract, so there's only 12% of the contract that he hasn't placed with subs yet. And then to date, we built about 11% of that 34 million. So things are moving along. As you start a construction project, the buildings kind of start out smaller, and then as you get further and further along, they get larger. They kind of ramp down when you complete. So we're really chugging along, making a ton of progress on site. And once again, it's just really de-risked by having that GMP in place.
And when it comes to the schedule and coordination of the current expectations for the projects can we get an update on what this looks like for the current status?
Yeah, we haven't had really any delays. Things are on time, on budget. There's just been a couple, weather days, which is typical. You can't control the weather, unfortunately. But we build those weather days into our schedule, so won't have an impact on our delivery date. Things have been moving smoothly. We had to relocate a gas line. We've been working with the gas company on that. That commenced in July. And the city's been working hand in hand with us to get us all our approvals. All the entitlements were done long before we broke ground, but you've got to get inspectors on site and make sure that you're meeting all the requirements, which we've been coordinating with the city really nicely. So things are moving along.
No, Stephen, as a part of my investment, I do expect you to control the weather. So if you can just get on that, I'd really appreciate it. Make some calls, get the weather moved. I think that would really make our audience feel confident, even more so in this investment opportunity.
And the nice thing is once we start our pouring our concrete pads, I mean, the weather really doesn't matter that much. They can kind of work rain or shine. So we're almost to that point.
Fantastic. And now let's talk about leasing and marketing. Ultimately, being able to have a strong marketing campaign to continue to deliver on your ability to lease units up to that 95 to 98% level, even at pro forma, if not 20% above pro forma, like you've achieved before. Can you please walk us through what's going on for leasing and marketing to make sure that these properties get occupied and we can be prepared for a solid sale in a couple of years?
Yeah, we have our own property management arm. So, unlike some developers, we're vertically integrated in that regard. So, we've got a management team. They look at each market, they come up with a marketing plan for each market. And basically, where we're at right now is that we're already looking at staffing for the site. We're getting our website spun up. We're going to be signing contracts with apartments.com and Zillow, and we market it really heavy digitally. We've got signage on the construction fencing, and so we start getting leads early. And then, when we open the first phase, we typically will have about the first phase leased up, and then every phase thereafter, 'cause this actually has 9 separate phases. So, we're this is our seventh one of these build to rent projects, and so we're really experts at leasing these. And we really understand, the tenants that are going to be living here, drill into what they're looking for, and come up with the right marketing plans to address the demographics we expect to live on site.
So for our audience to understand better, when is the first phase of homes expected to be completed? From end of August 2026.
Yeah, so we'll get our clubhouse, plan to get our clubhouse in the spring. So it's looking like that'll be kind of February, March timeframe when we'll get our clubhouse. And then a couple of months later in May, we'll get our first phase of homes. So, um, you know, it's right around the corner. We're already staffing up for that. It's nice that we're going to get the clubhouse ahead of time. That allows us to have full staff on site and begin pre-leasing. Even prior to that, we'll begin pre-leasing, but having a clubhouse open where you'll be able to have, your furniture and your staff on site, it'll be great for our ability to sign leases before we even get homes.
And you're specifically going to be starting leasing in the next 30 days in terms of marketing plans and signing contracts with partners. So why is it that starting your marketing 8 months before you actually have your homes constructed, what have you seen that is showcased that that needs to happen in order for you to be successful?
Yeah, it's really about just getting the word out there about your project, letting people know that it's about to enter the market. A lot of people do plan that far out for when they're going to be moving, especially when you're talking about the summer time frame. A lot of people are, counting the months until their lease is up. So it's just getting in front of those folks that might be looking to move in that same time frame and making sure that they're aware that when they are looking to move, that your project is an option. So it's kind of a slow drip at first. Start on the digital side until you can actually have a physical brick and mortar where you lease out of. But yeah, really starting 8 months out, or we talk about 30, 60 days from now, it's really going to be heavy digital. Getting lots of wait list interest, and then continuing to get those email addresses and contact information so we can continually email updates on when the project's gonna open and that they can secure their first home.
Okay. How prevalent would you say the wait list is when it comes to those first set of move-ins? Does that tend to be a highly converting list when you start building that up so early in advance?
It definitely gives you a better chance for success. I mean, at the end of the day, we're looking for, approximately 25 people to come fill up that first phase. So it's really just about, finding the right fit between those that are interested and those that will actually lease. So you never really know exactly. It's hard to say, hey, typically from a wait list, I mean, I would say it's when you're this far out, I mean, you're converting maybe 25% of folks into leases, but it, it it really depends on when you can get them on site and do that first tour, but it definitely gives you a leg up when you can build a wait list like that.
Perfect. All right. Well, that walks us through our current content for updates this evening. If you're interested and more than interested in participating in the Trulo Homes Cottonwood Creek Build to Rent community opportunity, we have a QR code here. We can go make your first soft commitment and view offering documentation. We're going to go ahead now and open it up for about a 10 to 15 minute Q&A before we do our 10 to 15 minute Cobb Club breakout session, which is a small group breakout for our Cobb Club members attending tonight's content. So if you have any questions, comments, concerns for myself, Stephen, or Ryan about the opportunity, the nature of the investment, and status of the project, or anything else about the overall project itself, please go ahead and put them in the chat now, or you can use the Q&A function to answer any questions. If there are any questions, I'll answer some that have been submitted in advance of the content for the betterment of everyone here and for those who are watching the recording. But if you have any questions or have any notes or comments, please go ahead and put them out now, and we'll go ahead and get those remitted to the team. And looks like we have our first. Okay. Question from Kevin. On this investment opportunity, are there any tax benefits or is this cash on cash? And what is the current competition in Waco? So let's take that piece by piece. First off, is there any depreciation associated with this opportunity?
Yeah, there is. We use cost segregation studies and bonus depreciation to really max out and front load the depreciation benefit. So I would expect an investor, if they invest 100,000, I would expect them to get more than 100,000, maybe 105 or so back in offsets taxable income. And about 80% of that's going to come in 2027, which is the first year we put a bunch of these units into service. So yeah, substantial tax benefits there.
Perfect. So for those, I'm sure everyone heard that. Yes, up to if not more than 100% bonus appreciation available with this investment. But the vast majority, the biggest bite of that apple comes in 2027 as homes are being delivered. So investing in this opportunity is a plan for depreciation in 2027. Next, part of that question is, what does current competition look like in build-to-rent space? And for example, you've had 6 projects in multiple markets that have all been built, stabilized, and leased up. Why are you confident you can do it here? And are you confident you're going to be able to stand out against any other competing product?
Yeah, absolutely. We're confident. We've been a first mover, a fast mover in strong secondary markets that we think are underinvested and undersupplied. And Waco certainly checks that box. We're going to be the first ones in this market with this product type. And furthermore, we feel like that we have the best build to rent site in the market in terms of location. So yeah, I feel very confident that we're going to stand out in the marketplace. There's not a ton of new supply coming in Waco. Again, there's nothing like this coming. There's been some traditional multifamily built, but in general, Waco never experienced the big supply wave that you saw in markets like Austin or Dallas.
Fantastic. All right, another question from Franklin. The minimum investment for this opportunity is 100,000. And the next question is, any cash flow in year 2027, or is it completely deferred and accrued throughout the entire exit? And this is the answer is in the middle of this. So Ryan, I'll kick this to you for when investors can expect preferred returns to start being paid over the course of the investment period.
Yeah, I think Jinx, or the property we sold in the Tulsa market in January is a good example. We refinanced that project, put fixed rate debt on, and made distributions for about 18 months. We sold it in 4.5 years. So yeah, the plan is to make distributions once we hit stabilization, which we define as 95% occupancy. And, there's enough free cash flow to support that. So yes, there would be distributions. Would expect that would be, kind of 30 months in. So 5 months off of that. So let's say 2 years from now, we'll start looking at distributions, and then, the bulk of the return will come at the exit, but, I would expect mid to high single digit yields until we exit once post stabilization. So.
Perfect. So to clarify, guys, distribution starting around month 30. We're about month 5 already in. So that would put your first distribution starting around mid to late 2028, and then cash flow on an ongoing basis until the sale of the eventual asset. So it's not completely deferred. You're not getting anything until the very end. You are getting things starting around stabilization, ongoing. All right, looks like we have one more question over here. I'm going to go ahead and open this up. From Emil, when do you think the prop will be rent stabilized to start giving dividends or distributions? Again, that'd be about month 30. About month 30 is when we're projecting that. So like the other projects that we've seen in this track record so far, they're all between that 96 and 98%. The same thing we'll look for here, right around that 95% is when the distributions would start, and then you start getting the checks. And Ryan, when those distributions do start, would that be monthly or quarterly?
Paid quarterly.
Paid quarterly. Perfect. All right. I believe that's all the questions I'm currently seeing in our chat or in our Q&A for this opportunity. Are there any other last second questions, comments, or concerns that we can address for you all this evening before I give my closing comments and closing thoughts? Kevin asks to confirm the goal is to sell this asset once occupied, not going to continue to operate it. Is that correct?
That's correct. That's the business plan, is to build at least up and sell it. And we've underwritten 43 months for that.
Perfect. So 43-month total project. So right now from today, that would be 38 months. So if you were to say, I'm going to participate in this today, and you'd have 38 months or just over 3 years from about investment to sale, which I do want to point out for everyone this evening. We're talking about return projections where we have that 1.9 to 2.0 equity multiple. That's in just over 3 years. So on a standard multifamily deal where you might see 2x over 5 years, this deal is the equivalent of a 3x over 5 years if you actually extrapolate out the return. So it's about getting the same level of equity growth in a shorter period of time with also having some cash flow associated with it, which is what they're able to do by realizing the exit. Robert asks, can I please post my email and phone number? If you're going to ask me to dinner, you can go ahead and text me right there and I can be bribed with a good steak for any conversation. So yes, that's my contact info there. Donato Timberview Capital, and the phone number is 563-508-1749 for my phone number. Franklin then asked, what can the audience expect in terms of construction updates during the next 30 months? So will they expect monthly, quarterly? What can they expect from you guys?
Yeah, we're producing quarterly reports. I know I've shared some of those with you, Donato,
Yep.
already. We push those out through our investor relations system, which is called Agora. Works very well. So it is, yeah, we'll provide regular updates. That'll obviously be the focus in the near term, is construction updates. And then obviously once we get into operations and leasing, we'll be sharing that information as well and ultimately financial performance. But yes, expect quarterly updates.
Perfect. And over the course of the last several months, guys, we've been doing updates about every 4 to 6 weeks with update webinars. We'll continue to do relatively regular update webinars as well with this organization, talking about it. And I think that is all the questions I'm seeing so far on this opportunity. And checking our chat. Oh, we got one more here in the Q&A. Perfect. From Neil, would this investment be appropriate for a discounted Roth rollover conversion? Would this be appropriate for a discount Roth rollover conversion? I'd probably have you speak to my colleague Tracy about whether it applies for you. That's going to come down to what you have in your Roth and other types of tax situation you're at this year. We're more than happy to speak with you about this one-on-one. The answer is it might, with the depreciation, with the equity growth coming up. But we'll want to sit down and talk to you about what your current Roth situation looks like before we guide you in one way or the other about what the potential upside is for a discount Roth rollover in this current situation. But possibly yes. And we need to talk about the timing of that as well because of the depreciation and things and equity growth happening at certain points of time. We want to talk about that as time comes over. But due to the relatively short nature of the investment and higher equity growth, it definitely could be. Right. Okay, I think that answers all of our questions, comments, concerns. I'll go ahead and wrap up with for our comp club breakout with my notes. Team, I always like to reiterate that we look at a lot of opportunities at Timberview Capital, and we were presented around 6 to 8 different development opportunities around the end of Q1, beginning of Q2 this year, and Ryan and Stevens were the group that we felt the strongest about. In the development space, it's virtually unheard of for investors like yourselves to be able to invest in something that's already closed, already capitalized, already in development, and already 5 months in, and still be able to participate where the returns that we're showcasing are getting better and better due to the nature of a shorter and shorter hold period. With the team that's been able to do this 6 times in 6 different markets and stabilize it each time. Ultimately, this opportunity, is our opinion, provides some of the most risk mitigated access to developments that is currently out there in the marketplace, which is why you're all seeing it today. And it doesn't require you to gamble on land acquisition if they can start the development, if they can get the loan, all that's already been completed and it's on track. So if you have interest in being able to plan for depreciation in 2027, if you want to be able to get higher equity growth in 3 years as opposed to waiting 5 to 7, and you're looking to be able to have some capital alongside with it with some exposure to a solid team, a strong operating record, I really encourage you to take a look at this opportunity and see if it might make sense for you, or reach out to our team and we can speak to you one-on-one about its benefits, its risks, and you can decide if this makes sense for you at this time. Besides that, I want to say a big thank you to Ryan and Steven for taking some time out of your evenings to come and speak with us this evening and provide this update. And we're looking forward to doing a lot more work with you guys and hopefully bringing on some more investors to join you in this project.
Thanks, Donato. Yeah, enjoyed being with you all, and yeah, have a great evening.
Thanks, Donato, and thanks everybody. Enjoyed being here.
Absolutely. It's our pleasure. All right, everyone. Thank you guys so much for being here this evening. We're going to go ahead and send out the invitation for the Cobb Club breakout here in just a few moments. The soft commit link for this opportunity has also been posted in the chat one more time by my colleague Myra. Stephen and Ryan, thank you guys so much for being here tonight, and have a great rest of your evening. And for our audience this evening, feel free to reach out for any questions you guys might have afterwards. And our Cobb Club members, you'll get that breakout link here in just a minute.
Thank you.
Awesome. Thank you, guys.
Thanks.
Perfect. All right, Cobb Club members, you should have just received the invitation to the breakout room. We'll see you in just a hot minute. For Timberview Capital Network, appreciate you guys being around. We'll be more than happy to pop on and answer any questions you might have one-on-one. Besides that, have a great rest of your evening. I really encourage you to consider this opportunity, as I think it offers some of the strongest things that we've seen in development without having to have all the risk. I'm going to join our breakout room now. Have a great rest of your night.